Okay.
And so, Gary Thompson, welcome to the Beyond Tax Season podcast. We have been attempting to record this for at least 6 months, and it's not my fault. It's your clients keep you too busy.
It has definitely not been your fault, and I'm appreciative of my clients keeping me busy, but I'm grateful also for the opportunity to join you. So it's been a long time in coming.
Great, great. Well, it's been so long that I lost the intro that I was going to write. So why don't you introduce yourself? Because our paths crossed on LinkedIn. I saw you were doing consulting right when I was starting my coaching gig, and now here we are actually meeting. So introduce yourself. Tell us how you got here, what you're doing now, because you're in my from what I can see from my perspective, you're doing things at a really high level. And I think it's good to have the audience know the whole range of what's out there and happening in the profession. This, as you can tell by the title, this is aimed at the practitioner that is trying to go beyond tax season. Do that advisory thing.
Yep,
Uh, and I thought this would be fun to bring up just to spark your uh, thinking. Remember this report?
I do. Absolutely do. Yes.
Yeah, I mean, 2025 seemed so far away when that report came out.
Yeah, it really does. It seems like an ancient memory. Hey, thank you again for the opportunity to be on here. It's just been very blessed to be in a great industry, and I see the future even brighter than the past. I just see it differently. So accidental CPA is probably a good way of saying it. My goal was to be an attorney, and I went to school, took accounting as an elective, and here I am 41 years later. I was fortunate to begin my career at Arthur Anderson, which I think in many ways still sets the table for a lot of the ways that I think about the practice, a lot of positive things around culture, work hard, play hard. I mean, there was this balance at the firm. And after several years of that in Atlanta, Georgia, where I was very niched, I was SEC high tech guy. So, we talk a lot about niches and specialization. That was 40 some years ago, and that's what I was. And with the encouragement of a father-in-law and the support of a great wife, we moved to Richmond, Virginia, which was largely her home growing up, and started my own practice, supporting family business, father-in-law's business, starting my own CPA firm, and just having the privilege from 1989 till 2019 of seeing a little small, struggling CPA practice go from a sole proprietorship to I ended my career. I think at the time we were number 12 in the nation in terms of size. And so a lot of what I try to do now in my consulting profession is just to share that journey. And candidly, many times firms will benefit more from the mistakes that I made along the way. Don't do it. Don't do it. As much as they will for some of the things that I believe went well. But I had the opportunity to retire at age 55. I had a desire and an itch, maybe, as they would say here in Virginia, where I live, to do something else. And the something else is to be an advisor to leaders in the profession. And as I contemplated what that would look like in 2019, I would say that about a third of that is what I'm doing now. But with all of the disruption that's going on in the industry, and I know you and I will talk about that while we're together, I have pivoted to where the market needed me to be. And there are some tremendous consultants and advisors in the CPA space. I've just been fortunate to be one that lived the life of a practitioner who sat in the seat that leaders are sitting in and considering the future and how do you think more transformatively about what's next. And so I'm just blessed that it's resonated in the profession. And I always give a tip of the cap to Alan Colton, who was a consultant for our firm
Mm, mm,
many, many years ago.
mm-hmm.
And thinking about governance and partner comp, I related to what he was doing for us. And as I got a little further in my career, I remember picking up the phone and calling Alan and saying, I think I might want to do what you're doing at some point. And Alan nudged me over the line to do this. And
Oh, isn't Alan basically a high level M&A guy between accounting firms now?
he is. Alan's trajectory, when I knew him, Alan had been in public accounting and had been really a guru at a lot of the practice management elements, thinking about governance, thinking about partner compensation, thinking about the things that are on that flywheel of overall firm governance. And deservedly so, because of the connections that he made through his practice management and advisory work, he became the perfect person to be able to facilitate a lot of the M&A that's going on in the profession. He knows firms know him and trust him. And certainly I did as well.
Hmm.
So, one of the things that I've learned about our profession as CPAs in general is that we're a great peer group. We help each other. What I found as I considered the advisory role is that the same is true. We have a great group of advisors um, who have different spaces in the profession. And I've just tried to uh, find the space that's right based on my experiences and my talent. And I couldn't have imagined in 2019 where we would be and the plentiful opportunities. And to your comment earlier, how busy it all is. So it's a wonderful time to talk about our profession. That's for sure.
Well, it's wonderful. Did you think it's wonderful? Because from the perspective I have, I'm still getting the firm owners out of being the bottleneck in their business.
Yeah,
We're at that level.
yeah, yeah.
So tell me a little bit about you went to number 12 in the nation or the state?
In the nation.
What was the name of the firm?
At the time I retired, it was Dixon Hughes Goodman. Now it's part of the Forbes Mazars. They merged with BKD, Dixon Hughes Goodman, BKD
Right.
did their merger about a year and a half after my retirement to form Forbes, and then subsequently now Forbes Mazars.
Wow. Wow. Yeah. You see, I'm on Forbes's email distribution, and I knew Dixon Hughes had an office in Tyson's.
Yes, that was one of my offices. So DHG was the G of DHG was our firm. And
Ah,
so we were a Maryland, DC, Virginia firm. DH, Dixon Hughes, was North Carolina, South Carolina, Georgia, I think West Virginia firm. And so when we came together to form at the time, probably 250, $260 million firm with about 30 offices. And, from there we expanded and grew. So yes, that's kind of the genesis. So even to your point, as I worked with firms, I remember again, as I said earlier, being the sole proprietor, and I remember when that the next partner, and we were a file partner firm, and then
well, let's talk about that
yeah,
stage
yeah,
because I'm
yeah,
working with typically the sole owners, the founder, the like when the light if Elvis leaves the building, lights
yeah,
never come back on.
yeah,
So
yeah.
how did you go through that? What was it your niche brought so much business that there was enough resource to grow? How did all that happen?
Oh man, do we have 3 hours for this? No, I
No,
wish I
but
could.
we can have more than one episode. If you want to say,
Yeah, no.
that's
I,
if we do this, we're not gonna be able to get to that.
Earlier, I mentioned that I enjoy sharing my mistakes because I think people learn from it. So no, although I was heavily niched in my early career at Arthur Anderson, when I started my own practice, it was a very practical thing. I needed clients to pay the bills. And my father-in-law was in the construction business, was gracious in introducing me to a lot of his colleagues. I got active in things such as the Kiwanis Club and the local home builders association. And it was definitely one of those things where at some point you woke up and you're a mile wide and an inch thick. I was very fortunate to be able to see growth, but it was not strategic growth in the context of niched industry or services based. It was if you call me today and need a tax return, you call me tomorrow and you need an audit, you would do it. And so, like a lot of practices, until recently, really, and probably still are many like that, we were community based. met the needs of our business community, small to medium sized businesses, and it required us to be able to pivot. And I think that part was good to developing a strong business acumen, to be able to speak to what's happening and how things such as the tariffs or the Iran war may be affecting, our local businesses. To now, I think our clients benefit from heavily niche, deep knowledge people, but maybe they're missing some of that advisory connectivity. So I think somewhere, I don't want to say in between, meaning 50-50, but there needs to be this balance of, I believe the profession requires and demands much more specialization. But I also think that the small to medium markets still require and need CPAs to be really strong business acumen people. And I personally enjoy that. I like reading newspapers. I like staying up with what's going on geopolitically. I love talking about what's going on in the industry, but it also prevented me from going below a certain level in deep knowledge. So I was never going to be the one from a CPA standpoint, providing service as a client, that was going to be the deep, deep person. I had partners and staff who did that. But old Gary was just going to be wherever.
It doesn't seem like you had trouble getting business.
I did
What,
not.
so what's that secret sauce? Because a lot of the 650 to a million, one, they're the bottleneck, and
Yep.
they
Yes.
have trouble getting that flow of clients that want more than just the tax return. They want
Yeah.
the niche, the deep specialization, and are willing to pay for it. So
Yes.
where is that a common problem, or is there a certain break gravity type thing where it just starts to flow?
I think it's a common problem. And the reason I believe that is one of the things that makes us such valuable parts of the economy is that we're stable, we provide stability, we're generally precise type people. We want to have good answers. We're measured. We don't like to be out on the ledge taking too many chances. That's good for the economy. It does provide stability. That same, though, instinct makes us much more cautious, adding people to our business, being willing to advise on things that maybe we aren't the deep leaders on. The example that I like to use of that is we use the term thought leadership very, very loosely in our industry. And my observation is that we really don't have that many people who are thought leaders. We have a lot of people who are knowledge sharers. We learn something, we share the knowledge. There are few that will take the chance, go out on the edge, and I guess postulate as to what something may mean. It's not in our DNA. I just had a little bit more of that, maybe is a good way of saying it. I mean, I wasn't some crazy risk taker, but if I had a client that was in X industry, I wanted to find out all I could about the industry and whether it was a tax law, an accounting law, or maybe something on the periphery. I wanted to know that and kind of play in that space with them. The other thing is I had a really tough time learning to say no in the profession. And there was a good part of that and a bad part of that. And the good part of that was if a client called me about something with which I was not familiar, I was going to go find out about it. And whether that was, hey, we need to find out what the state of Virginia, which is where I'm domiciled, is going to do about sales tax between related party companies. Well, that's a little bit of tax, but that's really more about public policy, right? So I engaged in those type of things, and it's a natural curiosity for that type of stuff. So, I'm blessed that I was kind of in the DNA, I guess, more than anything else.
So who was willing to pay you so you could grow? Because that is the typical trap. Hey, I just have a
Yeah.
quick question. And then how do you bill for that? And you say knowledge sharers, I call it answer machine.
Yeah.
Take it as
Yep.
their so many accountants take it as their duty
Yep.
to know the answer and to
Yep.
give it right away.
Yep.
So how do we help the $1 million firm, the $2 million firm monetize that?
I think first of all, be willing to bill for it. And even though I can't tell you that I was always a super assertive in the amount that I billed, what I did find was that they would pay for it if they found value, and that over time, as you begin to build more and more of your value proposition, they trusted you, they saw you as an integral part of what they're doing, then you began to feel more comfortable with that. So I can't say that, day one it was instinctive. And if anything, maybe a little bit of it was um, protection. Especially as a small firm, I was always fearful that they were going to go walk down the street to that firm that's larger than me that could provide all the services. So, I wanted to make myself an important part of what they were doing. I wanted to be involved in their family dynamics and think about succession planning for their business. I wanted to be involved in disputes. I didn't mind being involved in disputes among family members. I didn't mind doing things that weren't traditionally in the quote unquote CPA space to help them out. In fact, maybe at times I did a little too much of that.
Well,
But
let's talk about that. You keep saying I. So is
yeah,
that part of what you help your firms that you consult with to get out there more, to be
yeah,
willing to volunteer information or learn, or
yeah,
as opposed to only wait for the question to actually go foment discussion?
very much so. Thank you for the way you posed that question. I think it's really well posed. I, look, I work with firms and I encourage them to be more niched and more specialized, but I'll also back up and say what I'm not saying is to limit your role as an advisor to a company. I'm a sports junkie. I'm a Pittsburgh Steelers fan, so I'm going to use football. I wanted to be my client's quarterback. I wanted them calling me for about everything, recognizing that there was a handful of things that I directly would be able to provide services to them. And there's other things where I would chase down either other colleagues in my firm or become a resource to help them find other opportunities. And where I've seen that the most in our profession in the last 7 years is when COVID hit and our clients were in a panic. CPA firm clients, not my clients, but CPA firm clients were in a panic. Back to that personality trait, they saw in us stability and good advisors. I saw our profession really pivot and to say, I can work on things such as a PPP loan, even though I don't even know what you're talking about. I can help quarterback you through with your bank on, how to get new borrowings and things of that nature. I, the CPA, can be involved in being your overall advisor and quarterback, even though we didn't do it. We did it for our clients. And I think in many ways that has um, enlightened a lot of us as to what we meant when we were saying advisor or advisory mindset. We tend to think of formal advisory services, which I'm a huge fan of and love. But what it was basically saying is make yourself invaluable to the client, make them think of you as being the one to call. And even if you didn't have the solution, hey, I know a banker that might be able to help you out. I know a bonding agent that might look at where you are, with your work in process differently. I know. And it was
But
kind of
now
using that.
we're going to run out of time,
Yeah.
right? So how do I mean? Wait, well, no, I haven't talked to him in 5 months. Why not?
Yeah. Yeah.
How do you keep saying I? Are you
Yeah.
finding firms help more Garys in their team to and empowering them to be that proactive? Because proactivity as opposed to reactivity is a classic. I have to call to ask about this stuff as opposed to being told, hey, we ought to explore this type of thing.
Yes. Yeah. I'm a really big fan, and firms call it different things. We call it client account management, of really thinking about an ecosystem of our client. Pick your top 10, top 20, doesn't matter. Just define it however you want, and being very intentional about frequent meetings among the team. What do we know about what's going on with the client? Where might they have needs? What's going on in the industry? And so, look, I did best because, like many of us in our profession, we're busy, and our neglect of clients is not an intentional neglect; it's a busyness neglect. And so we would schedule regular client account management meetings, not just me, but our partners as we grew. It was a fairly big part of what we did is to think about our clients in a very distinctive way. And candidly, many of
About
the
them in
people in our industry aren't geared toward new business development in terms of going out and getting a new logo or a new company, but they could be really good at driving revenue to existing clients. And it required a structure or a process to get there.
tell me about that process because you said a distinctive way. What
Yeah.
what
Yeah. Yeah. So I'll give you an example of what my meetings might have looked like: 45 minutes to an hour in length. Few things ahead of time that I wanted the team to review. What's happening at the clients? What did we learn last time we're in the field? A series of probing questions that, by the way, this is to our youngest staff on the job, to the old gray hair people like me on the job, all of us thinking about that. And then I would usually bring in someone in our firm who likely didn't have anything to do with the job, but they were someone who thought out of the box, who would
Hmm.
challenge our thinking. And so we would have this meeting. It was structured. We would answer the questions that were distributed ahead of time. We'd have this other person in listening, and we would finish that meeting with a task list of, okay, what do we need to find out more about? What are some things we should go meet with a client about? And we would invariably end up scheduling a meeting with the client, going and meeting with them. Hey, we've been thinking about this, this, and this. Now, here's the thing. They knew we were there to sell services. This was no big secret. But what we were doing was selling them something that they needed. And they go, we've been thinking about that, but we didn't know where to turn, or we just hadn't had time. Thanks for bringing that to our attention. So there was a formality to how we went about it.
And that's what I have found is lacking. And if I brought this up again, I don't know if it'll be uh, in the video. I can share it with Ace to put it in, but this is I'm going to go with this is probably the first time you've seen this graphic.
Yeah.
But as your eyes kind of float through it, how close does it mirror what your structure, your way of working with the client over time is?
Yeah. In a lot of similarities to the thought process, right? It was understanding what we did for them, understanding what we learned, whether it's ratios, et cetera, tax opportunities. It was some industry review, as I mentioned earlier, trying to really understand, is there something that's getting ready to happen in their industry or we know about? And if you're in the oil and gas business now, you better be talking about what's going on in the Mid East right now, right? And so you're thinking of those things. Clients that were in the construction business, as I mentioned earlier, the impact of interest rates, on what it may or may not do. And so you're trying to get our staff and us all to think about those external forces.
No, it's just about the trial balance tying, right?
No, and that's just it. AI will do most of that for us in
Oh
the
yeah, we
future.
haven't even gotten to AI.
Yeah, and so like to me, the fun part to tell, particularly young aspiring accountants, is some of that grunt work that I used to have to do is now going to be done for you. But what you're going to be able to do is to take the results of all that work and apply an advisory lens to it. And I believe that the key to that will be training people to think in an advisory way, which means we are going to have more structured things of this nature. I mean, if you take,
You,
you
you,
know,
you, you step right in the trap. What is thinking in an advisory way? I mean, I've got an idea of how to overlay it on just about anything in life, but what is your definition of thinking in an advisory way?
I think it's going from a compliance orientation to a solutions orientation, that we're helping clients find solutions to challenges and opportunities that they may have. And so it is taking facts and numbers that we're really good at, historical results. We tend to be a profession that looks backwards, last year's audit, last year's tax returns, and applying many of those things to say, if that stays true, what can we anticipate? How do we help reach solutions around liquidity? How do we reach solutions around posturing ourselves with the new tax law for 2026? You can go to it certainly looks like they're going to have struggles with their covenants if we're doing an audit, as an example, if things continue. So how do we provide solutions or a framework for solutions? Because obviously we have to be careful if we're auditors as to what we can and can't do, but a framework for our clients to be able to think about taking numbers, taking historical results, and applying them to a future lens.
So you said solutions.
You know,
Somebody had to tell you what the problem was. Or do you come up with the problem all by yourself?
well, if we think of our traditional services in the CPA space, I'll answer your question just thinking about audit or assurance and then tax. In the audit world, we're likely to see some of the warning signs of problems. Again, liquidity ratios, debt covenants, um, as an example. Okay, as we forecast, as we look, we see some issues ahead. In the tax area, that's actually the easiest area in many ways. And when I say easy, I don't mean technically, but you can identify problems because we have shifts in legislation, expiration of certain tax codes, implementation of tax codes, and we actually have the targeted ability to see where might the potential problems be. I talked to a firm the other day that uses AI to look at all tax returns with three lenses. One lens is where might there be errors in what we provided? Last year they had $10,000 of interest, this year zero. AI is just doing an analytical review. So that's one lens. The second lens, are there particular tax elections that we might be able to make this year to help with the prior year tax situation? And then the third is a look forward. Each of those requires, even though AI is teasing us with the ideas, requires us to be able to be part of the solutions and identification of opportunities. So that's a supplemented by technology and AI opportunity for us. So AI in a way has identified some of the challenges or problems using your term, and allows us then to say, what do we do about it?
Again, I'm seeing proactivity.
Yeah,
I mean, which is at the level of firm that I've worked with to date, proactivity is rare. It's almost like pulling eye teeth to
yeah,
do anything other than to get the accounting right and get the tax return right. I've brought in tax planning, which is really a branch of compliance to a certain degree, and is so easy because people hate paying taxes. But to dig deeper, and I'll bring a chapter out of one of Vern Harnish's books. I think it was Scaling Up, and it might have been in the audio version only, where the bankers came in and it wasn't the normal bankers. It was the guys from the recovery team
yeah, yeah, yeah,
because they said we're not only terminating your line, but we're thinking we need to call it.
yeah, yeah, yeah,
And I said, "What are you talking about? We're look, we're got lots of revenue, lots of sales, products going out the door. Yeah, but you're doing it with debt."
yeah.
And nobody
But
noticed that.
yeah,
There was
yes,
nobody
yeah.
on the finance function in terms of the accounting staff uh, that kept those guys out of the boardroom.
There's been no better time, in my opinion, in the 40 plus years that I've been doing this to be proactive than now, because we can leverage so much to technology and automation that we now should have the time to turn our attention to being proactive. Now, if we don't get value for that, if we're still hours times rate billers, we're going to really mess up. We're going to potentially lose revenue, which puts pressure on us to fill the time with other clients, and you can go through the list. But I mean, I don't know about you, but I use AI daily, and it takes a task that maybe would have taken me 2 hours, and now with AI and my own input, it's 30 minutes to 45 minutes. It's not making it 2 hours to 5 minutes, although I think in some cases it can be. But for me, it takes something that would have taken me all this time to think about and gets me to a really good starting point, which means I now have at least an hour and a half to think differently about how I might approach something, to think about the client, to find out what they may need, to dig a little bit deeper. And so the opportunity for smaller practitioners or whatever you want to call it, sole proprietorships, firms that in the size that you're talking about, to repurpose their time has never been better. I think, however, we have to, one, be able to value our time appropriately. Two, and I'm going to say this very, very carefully, we have to value quality correctly. I still think a lot of smaller practitioners, and it goes everywhere, overvalue certain things that the clients don't value. And there's a lot of jokes about materiality and all kinds of stuff. Well,
Yeah, 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 yeah,
I
yeah.
I get it, but that's not what your clients really want. They assume, of course, that your tax return or your audit is going to be done correctly, but we can leverage a lot of that. What they really want is for you to be able to say, "What's it mean?"
Oh, I had a client early on that was so proud of the like 30-page paper he wrote on one little change in the tax law. And it's like, you spent all that time and now you're still at the office till midnight doing tax returns. There's a mismatch here. So, but let's go to the valuation. The let's invoke the spirit of Ron Baker.
Okay.
And because so many people will say, "Yeah, I know Ron Baker. He's that value billing guy." No, he's not. He's the value pricing guy.
Yep. I mean, yeah, he's a value pricing. I agree.
It's here's what I'm going to do. Here's the value I place on it. Do you agree in advance?
Yes.
Not, well, I'm going to bill them. Oh, I'll write that down a little bit because no.
Yep.
Let's. So how do we get that backbone in the firm owners to one of my guests, she did 2 rounds of raising prices either 150 or 100%. And yeah, lost clients, but the first time she did it, she ended up making more money.
Yep.
I think the third time she did it, it actually took a dip, but creates the time and then creates a value transaction that allows you to have the
Yep.
time to be proactive. Uh,
Yep.
I invoke Gary Boomer on my board of directors when I coach firms. I bring in, Darren Root, and now if you had enough stuff out there, I would say, hey, let's bring Gary Thompson to the board meeting. But Gary Boomer says, not Gary Boomer, but the persona, firm owners are afraid to cut that bottom 40% because but they need to.
They did. Like I have a client that this is going to combine a couple thoughts into one that committed to cutting clients. They went through this exercise of D clients, whatever firms call it. But instead of directly calling the clients, they did it the back way, right? They said, we're going to double your fees. But they went even further. We're going to require you to pay the fee at one time in advance of the work. So they did that to 600 clients. Significant increase in fee. You have to pay it by January 31st. And in their mind, that was going to be a way of chasing a bunch of clients out. Fewer than 30 left.
Wow.
And so it made them realize that they had a pricing problem more than anything else. And what they found was that their clients obviously valued their work. The market was right for the situation. So the next year they expanded that even more significantly. And so now if you're a tax client of theirs, you know that you're going to get an engagement letter in December. You have to sign that engagement letter agreeing to the dates of getting information in, and you have to pay an estimated fee. It's not even they're obviously, if you provide some surprise that no one knew about a transaction, 1031 exchange, there might be more, but you got to pay that by January 31st, and their clients are now in the habit of it. The other thing that I see as a significant opportunity is in firms where you have an audit team and a tax team, we tend to bill differently. And next thing you know, the client's getting 6 different invoices during the year. It's confusing to them. And we get the opportunity to walk in the door at the beginning of the year as a tax team and an audit team, maybe the tax partner and audit partner, and says, your invoice for the year is going to be $50,000, $20,000, 5,000, whatever it is, and we're going to bill you 4 times a year. And we're not billing you for extra phone calls unless it's something out of the ordinary. And our service commitment to you is this is going to include 4 tax planning meetings a year, getting your audit done by X. And your commitment to us is you're going to pay this fee in 4 increments. And the client's like, thank you for bringing clarity to my billing situation, to my budgeting situation. And yes, we understand that if we have some type of significant transaction, we're going to have to pay more, but they don't care about the rest. So I think part of this is we don't realize how much our clients want us to value price and to think differently about the increments in which we bill. We're doing them a favor at the same time we're helping ourselves.
So this is great. How do you calculate that value?
Well, I think most of us have some knowledge of the market. I mean, so there's obviously market opportunities for us if we've been competitive on things that we've lost or won. I always, when I would lose or win an opportunity that I felt was significant, I would do a deep dive with my client around why did we win, why did we lose, where were we on pricing, what can I find? So there's a lot of market intelligence that we can use. Like it's still the fact that we might want to know how many hours it's going to cost us to complete it is okay. It's okay to say we think it's going to take 10 hours of Gary's time to do the work. And by the way, we need to make sure we put some type of pricing in there for technology. It's okay to know how much time and effort, but don't tie your billings necessarily to that completely. Make sure that you're looking at it holistically. So we can, market information is always the best if we can get it. We obviously have patterns and history with clients that we need to, figure out how much we need to stay within those patterns or history. And then it doesn't hurt my feelings to know what kind of effort do we think we're going to have to get the job done.
I was listening and you're sparking all this thought that I want to, because I had Casey Brown on the podcast and
Mm.
because I love her way of presenting this idea. One, and she talked about it, it's really a courage problem. It's not just math. It's having the courage to
Yep.
stand up and say, this is what I'm worth. And,
Yep.
and she does a little bit of math around it, but have you ever heard of Casey Brown?
I have heard of her only because I've seen some stuff where she's been quoted, but I've not listened to her.
Uh, I'm going to put this in the chat and then ask you to
Okay.
control copy. Let's, it's short and just, I actually got emotional when I heard it for the first 10 times. Uh, but it's important for the profession.
Yeah, I agree.
Uh, so now let's talk about client size because everyone's definition of small to medium business is different.
Mhm.
And I what is a small client to your clients?
It depends. I have clients that are sole proprietors, and I have clients that are in the top 30, top 20, top 10. And so, if we think about the definition of an ideal client, in some of those firms, a small client is, a family-owned business, regardless of the revenue size, because to them it's about complexity. And in some firms, um, a small company that has regulatory oversight is a complex company. So
Mhm.
I think the definition is firm specific as opposed to, yeah, you can use revenue, employee sizes, number of geographic locations, complexity of the regulatory environment they're in, if they're an energy company versus, a construction company. So I think it's relative to firm by firm. It's funny because what we would call mid-market for many of my current clients in public accounting, those are large clients. All right. So,
Right.
beauty's in the eye of the beholder. Size of client thinks in the eyes of the beholder.
Yeah. 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 Okay, so here's one. I got started in this. I stumbled onto a book called "Selling to Serve" by James Ashford. He ended up writing software to make proposals customized and easy to get done. Because you know what happens. Oh yeah, I'll get you a proposal and
Yep.
get busy and
Yep.
don't get it out, that kind of thing.
Yep.
But he dropped somewhere in his writing or communication that 3% of gross revenue was a reasonable range for a business to invest in the finance function. What do you think of that as a metric?
I've never really studied that in the CPA space. Only because I think in the CPA space, we don't think of the finance function in general. One, a lot of small to medium firms are partner led, and so there's not a direct ability to correlate cost that way, right? Because they're practice partners as well as part-time leadership partners. To me, I benchmark overall staff salary cost, and in today's environment, definitely benchmark technology as a percentage of gross revenue, and tend to benchmark things such as marketing, business development spend. So I can't tell you that I've spent a lot of time looking at finance
Well, when I
in
say
any way.
finance function, I mean the internal and external. A lot of the AP and AR and even the data entry is done in-house, and then there's oversight, or the data entry is done by the firm, or sometimes it'll grow out to
Yep.
be the AR and AP. So what I'm doing is drawing a circle around that, be it inside or outside, for the firm to realize that that's truly an investment. It's not a cost. That as a range for them for the accounting firm to, hey, look, if we do all of that and we look at 3% of a $10 million business, that's a decent client. That you can fund
Yeah.
growth, you can staff it well.
Yep. Yep. Yeah. I've candidly just never looked at it that way. So it's a really insightful comment. It's not a way that I've ever looked for visibility into.
So now, then please share. How do you look at it when you coach or consult with a firm on how to build out their revenue model, to build out their service model? Do you give them guidance on how to price it?
Yes, we do talk about it, and for me, it's mostly market specific. Like I want to know what we can find out about if they're in a niche or vertical where we have a lot of public domain information, then that's great. So, as an example, when I do work for firms that do governmental higher education, PCAOB type work and things of that nature, access to market data is there and very relevant. We can get some understanding of what that is. Um, where there's a requirement, 990s is another great example where there's requirements for filings where there's public access ability. We've got that. So that's almost too easy, right? We can look at that and gain market intelligence. Um, we have the ability to, as I mentioned earlier, to do consistent debriefs on wins or losses to try to figure out what we can about where we stood in the market relative to pricing. I use that a lot,
Mm,
a
mm.
lot. As we were growing our client base, I didn't care if it was the smallest client to the largest client. I wanted them to know I was interested enough to knowing what caused us to win or what caused us to lose, and we kept that information there. We certainly have information about our own pricing from a historical standpoint. So that's generally the way I looked at it was what can we find out from a market standpoint, and then where we didn't have that ability, then we would go kind of the old-fashioned way, if you will, and try to figure out what's the effort going to be and how do we price that effort. And I think that's where it has to be so distinctly different because our effort can't simply be the direct number of hours. If we're leveraging the offshoring, what kind of pricing do we want to get for our offshoring people? Forget what we're paying them.
Right,
What's the
right, right.
relevant pricing? If we're using technology, AI, automation, whatever it is, what kind of pricing do we need to make sure? If, as an example, many firms now, 6, 8, 10% of their top lines being spent on technology. Well, you better bet we need to be incorporating that into our pricing in a significant way, or else there'll be no ROI on that.
You went across a point that shoot, I should have written it down. But anyway, oh, I know, sales team. So it sounds like you've got you're working with firms that have a, a, a real sales process. It's
Yes,
they, you know,
some do, some do.
yeah.
Yeah.
So they've got enough data to on the wins and losses to have a debrief or postmortem.
Yeah, many of them didn't, and that was just part of our advice is to say that's really easy to do. It's not just for pricing; it's actually a really good PR effort, even when you lost, to try to find out, hey, just some market intel here. Tell me, but look, they aren't going to always tell you everything, right? It wasn't just pricing. I wanted to know what were the distinguishing characteristics that made us, better or worse than our competitors. What is it? Um, those it's a whole market intelligence conversation that goes well beyond pricing.
Yeah, 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 yeah. I use a coaching system called Metronomics, and they call it the attribution framework, where the market expects these services, and these are the services you do. Where do you rank in the community of competitors in those? But well, so let's pivot here from firm management to profession. What's going on in the future with the profession? And PE and AI were last year's acronyms. They probably still will be.
Yeah,
Uh,
yeah.
and specifically, I'm not going to use any names, either the firm or the client, but what happens? What have you seen happen when the sole owner firm blends into the larger firm? And I don't mean a single partner joins two or three partners, but a single partner joins 100 partners. You
Mhm.
go from you're doing 2 or 3 million and you come into a 450 or billion-dollar. But what happens to that partner? What's that partner's experience, or what should be expected when okay, you got your buyout. Now you got to do your workout. What do they need to be aware of?
Well, they need to be aware of things before they get to that point, right? They need to understand culture. They need to understand, obviously, the finances. They need to understand expectations. Um, Oftentimes, these transactions will provide a guarantee for a couple of years. Well, at the end of the couple of years, we're in the new system. Well, what's that system look like? There needs to be an awareness. I have a client that taught me a phrase a couple of years ago. I want them to know what impact and influence they're going to have in the future as well, whether it's in their local office, in the industry or service line. And so for me, it's laying out a lot of those questions in advance.
Hmm.
Um, Candidly, a large firm's probably not going to buy a sole proprietor or single person without there being a well thought out plan. Well, what is the plan? What's it going to look like? Um, and there's a reality to not fully appreciating the gap, and it goes on both sides. The large firm doesn't often realize how big the gap is going to be when they walk in the door between their experiences and expectations around accountability, technology, et cetera. The other side, the small firm, believes because we've been in these very cordial small group conversations with CEOs and leaders that we're going to always have access to these people and they're going to be in our corner. And the reality is, and this is not a negative comment, it's just reality is when the deal's closed, that person, that CEO is moving on to the next opportunity. That's their role in their job. And now the operationalizing, I should say, of that small firm into the other is left to a group of people that we may not have had any relationship with in the deal negotiations. So, whether it's a one-person firm or a 10-person firm or whatever, we better get to know the people we're going to actually be dancing with every day. So the more of that we do in the diligence process, the less surprise that we're going to have.
Got it. Got it.
The other thing is I'm fearful at times that the smaller practitioner believes that they want me now, they must be happy with me, and so they're going to be content to let me be like I am. That's not the case, because those firms are on the move. Those firms will be increasing expectations, not just for that one partner, but for everybody. And oftentimes it'll feel for the smaller ones like, hey, we just got in the door. Now you're changing the rules. It's not about you. It's about an evolving firm and an evolving industry. So just really setting the expectations around governance, impact and influence, whom I'm
What
reporting
what
to,
is
what future plans.
what does impact and influence mean?
Most of us want to be able to know we have something where we're making a difference.
Okay.
And a single partner is likely not walking into a $450 million firm with a board seat, whatever. So what we can do, however, in that case in particular, many of those situations are we're bringing this person into our firm because she or he has something that we really need. They're famous in an industry or a service, or we're trying to build a new industry offering or whatever, and that person's the right one. Well, I want to know what my ability to impact the future of that particular practice niche is. And so it's appealing to my role and responsibility. And so while I know I'm no longer calling the shots, I do want to know that in this area where they've obviously targeted me as an asset, what is it that I'm going to be able to do that makes a difference going forward?
Got it. Got it. So talk about what you see coming, not this year with AI, and that we're eventually just going to blow a kiss to the tax return as it goes on to the IRS. But the bigger move, what is, well, I will do AI because as we automate and e- speed up the old work, how are we training the profession to truly be that proactive advisor?
Like there's some great examples and there's some not so great examples. I mentioned earlier the three looks at the tax return. That's AI. So that particular firm is training their staff to be better data analysts, not data analysts, just analysts, right? Help discover errors, help look at opportunities for impact the year we're doing the work for, help look for planning opportunities. And so, they do a lot of the things that we ordinarily used to do in the profession, developing checklists and things of that nature to try to get young people thinking about it. But now those checklists are starting at a much higher level of that. I think one of the biggest things the profession is missing in developing in my advisory mindset is just bringing our young staff along to important meetings. My first managing partner was a guy named Jim Edwards. He was the managing partner of Arthur Andersen's Atlanta office, and he routinely brought you to client meetings, even if you had no idea who the client was. He made you sit there and listen, and you learn from the interaction. And in many ways, it's easier in the profession to do that than ever, but we're actually doing less of it because we now got the constant video calls going on. Well, why can't I walk down the hallway or send an IM to a staff person saying, "Hey, I've caught a call with a client at 2 o'clock. Why don't you join me?" And so we're missing some of those things that we used to be able to learn from our leaders. We're just truly, truly missing it because it's kind of out of sight, out of mind, because they're not necessarily down the hallway anymore. They may be working from home or from a remote location. I think we need to pull people in at a younger age and really engage them. I see some firms doing a great job in that area, and then I see other firms that are just banging their head against the walls to how to do it.
Well, there's also the terrible event where the partner was like hoarding the relationship, and because that will never give a young person a career path if the partner's always, oh no, you don't take my client.
Yeah, and
So
that some of that gets back to our risk profile, our client service profile. I can't tell you the number of partners that I've worked with in my firm and then over the years now as a consultant who maybe correctly say they aren't going to do as good of a job as I have with this client. Well, they might be right, but the client may not need all that you're giving them anyway in terms of some of the stuff. So give them a chance. Give them a chance while you're still there and can mentor them. That's the frustrating part to me is so many partners hold on, hold on, hold on, don't want to transfer clients, and then it's too late. So, our ability to measure in compensation how well you are or aren't doing with mentoring and coaching others is a key pivot area for a lot of firms, small firms to large firms, is how do we make sure that people know that your ability to mentor me is as important as how much new work you got. Maybe not a complete equivalency, but the philosophy that mentoring and leveraging work is critically important.
Yeah, I mean, it just you are blessed in the quality of firm that you've been able to become important to. It just sounds like so much fun to have
It,
that ripe opportunities where that when they have the resources and opportunities that you can help them optimize. That's
Well, and the thing is, I think that's size agnostic. It's a mindset. So people ask me, what size firm do you work with? I said, I don't even think about size. I think about mindset. And so you could be a $500,000 firm that has a mindset of getting better, of having agile governance, of being willing to leverage, of being willing to think about technology, even offshoring and things of that nature. That's a mindset. You can be a $50 million firm that doesn't want to do any of it, and you, that's not where I want to spend a lot of my time. And so to me, it is about the mindset of the people.
cool, cool. Uh, I met a guy named Rob Brown. He's UK based.
Yep.
He's
Yep. I was on his podcast recently.
okay, okay, cool. He did a 2026 predictions or a 2025 review, something, and were you on that? What prediction did you make for 2026?
I can't recall exactly our conversation, but I did the two things that I think of is AI is going to go from theoretical to practical, and I'm seeing that in big way now. I'm just seeing firms of all sizes use AI and kind of figuring that out. Second is that the M&A and capital creation space will not slow down anytime soon. I
Really?
do fear that, and this isn't about pro or con private equity or M&A, but when I started my practice, I called a local banker, Bill Pollard, and said, I need $35,000. Bill said, come down in a few days and I'll have a check for you. That was capital, right? I was $35,000 was a lot of money, back in the day. But that was based on a business plan, based on how much, infrastructure I needed, but also based on what it was going to be to get right people in the door and things of that nature. I'm fearful that a lot of firms think in a good way about what they want to be in 5 years. I believe they generally think well about what are the priorities that support that. What I find is the big missing gap, because it's not been necessary in our profession, is what are those priorities going to cost us? Because we've always been able to fund them out of our normal earnings. Well, growth in the industry, whatever it was, 7.9%, our top line grew 7.9, but our bottom line only grew by 3% last year in the profession. There's a squeeze that's occurring. And I believe that most firms need to think differently and study in a little more depth the capital that's going to be required. And then we ask ourselves, from where do we get the capital? We can get it from the bank, we can get it from ourselves, which I'm working with a lot of firms that are increasing required partner capital, or we can get a strategic investor, which could be private equity or an upward merger. But we've not had to have tremendous number of capital conversations in our profession in my years, but I think we need to. So in my brief conversations with Rob, it was about the continued impact of evolving automation and now the tuck in more distinctively of AI, and then the need for capital to support strategic priorities. If
Wow.
you are a firm that's spending 3% of your top line on technology and you need to get to 6 to 8% to be relevant, that's a lot of money,
Hmm.
a lot of money. So
Hmm.
I was with a firm recently. We did this work over what their investments need to be over a 5 year period of time. We went to their partners, and their partners' eyeballs got this big around. It's the first time we had mapped out what their goals were going to cost them. And then we say, okay, who's willing to pay for it? And not many hands went up. And they're now in an exploration process
Wow.
for upward merger.
That's great that you've got it down to an Excel spreadsheet, I'm going to say, on here, you want to go there, here's what needs to happen. That is awesome.
We're accountants for heaven's sakes. We ought to be able to put the numbers together, but yeah. Yep. Yep.
That's great, man. Well, I really appreciated this.
I appreciate it as
Well,
well.
let's do one last thing. What networking can I do for you? What are you looking for?
I mean, I think similar to you, I'm looking to make a difference with firms that have a future mindset. And as I mentioned earlier, it's kind of agnostic to size. I don't define it that way. I also, we have so many good consultants like yourself and others in the industry. So what I think about is that lane where a CEO or a managing partner just needs someone that's been down that road and might be able to give them a different perspective. The way I think about a lot of things is not unique, but my approach can be. And I greatly admire the people who are fighting the fight. So I'm really always careful with my leaders. This isn't about embarrassing you or anything. This is about supporting and figuring out how, in many ways, I'll say the same thing that they've been saying, but it's just an outsider saying it, and this sounds smarter. I told people that May 31st, 2019, I was an idiot. June 1st, 2019, I was brilliant. What occurred was a retirement in that 24-hour period of time. Sometimes, in a firm, they get tired of your voice. They hear you blah, blah, blah all the time. And then the next day, an outsider comes in and says the same things, and it sounds a whole lot better. And so, it's what I just think about how firms might be able to benefit from some experiences. Advisor to leaders is what I say. I just want to be an advisor to leaders.
I agree with you, and I'm already coming up with someone I think I should have you.